In today's video, I'm going to talk to you about trading channels in the Forex, stock, and futures market. Let's get into it. Okay, so channels are one of the first things that I ever actually got interested in when first starting out as a technical trader. And before we get too far into it, what is a channel? Well, a channel is just what it sounds like in the real world. A channel is basically the idea that price is going to be going through and channeling between an extreme high and low. Now, these high and lows are going to be represented by trend lines. And believe it or not, trend lines can be going up as well, and they can also be going sideways. Now, channels, in retrospect to that, they can be going up, down, or even sideways channeling. And all this is doing as a technical trader is saying, okay, well, we have some observable patterns here. In situation one, this market seems to be trying to make a move higher, but every time it does, it gets faded into and it channels down, right? And then vice versa in channel number two, every time this market tries to come down, the channel kind of props it back up and continues the idea. And then finally, in channel number three, the idea is that price doesn't really go much of anywhere. It just kind of goes back and forth. And now you have a question on the table. Is there a way to trade it? Can we trade these observable patterns? And the answer is yes, you can. And so let's take a look at some real examples and talk about how we could theoretically approach trading channels in the market. The first thing we need to do is discuss how do we spot channels. And there's a little bit of subjectivity here, but for me, what I do, and again, technical trading, price action trading tends to be a bit subjective regardless, just because people see price action a bit differently. But in terms of a channel, what I'm going to be looking for, let's say we're looking at a market that is channeling higher, right? Well, how do we know that it's channeling higher? Personally, what I'll look for is two examples of a higher low. So let's say that we'll extend this out a little bit. Let's say that we're looking at this, let's imagine that we're looking at price and we see that this market is trending higher, right? For me, these two is enough to start considering this market to be in a channel, but we also want to mark the upper extremes as well, right? And so what we're going to do here is I'm looking for one higher low and two higher lows before extending a trend line along the bottom. And again, this is just the start of the channel because you have to say, we don't know, let's assume we don't know this information yet, and we're looking at just this. We have to say to ourselves, well, what's next? How can we anticipate a potential third bounce? And that's where we start getting a channel to the upside. So let's take a quick look at an example here. You can see that we kind of have what we would call, and in fact, what you can do on TradingView, this is kind of cool. You can actually copy and paste your analysis. So let's say that we observe that we're in a downward channel. And we're looking at this thing, we're saying, okay, you can already see that there has been one bounce here, two bounces here, and now this is the third question. Is it going to bounce off this? And so what we've done is we've taken this trend line, I did it just before we started filming, and I extended it using these two levels as our basis for the start of a channel. And then I extended it out. So as price started to retrace back up to this level, we could have looked for potential sells and maybe caught a little bit of the downside here. Now I've also done another one here just to be impartial, taking a look at the higher lows that we're seeing here. And let's see what kind of happens here. We get the break, okay? And so here's the first thing I want to say when I show you guys something on YouTube. When I show you guys something on YouTube, please know that I have already looked at these price action examples, and these are for example purposes only. I know that when you actually get into the charts, it's not always as easy as you see it on YouTube, and I'm fully aware of that, and I just want to make you guys aware of that, just to respect your time. I'm showing you good examples so that we can learn the concept, and then there's going to take practice in the real world when you're going out and you're practicing these concepts on your own. But anyways, let's extend this idea because now it seems like we've gotten a breakout. We've broken the other direction, and this channel, what we would call, this is a great example to start with because channels break. This is broken, right? Is broke because we broke out of what was working, right? So this was a good strategy, this was working, but then in this point we just have to cut the trade, whether that be with a stop loss or just resetting if you didn't take any trades, because now that downward channel no longer is alive. We would say it's broken or dead or whatever. Now, we have the opportunity, however, to look at potentially a new upward channel. We've marked this level. What if we get a retest all the way back down to this previous low? How are we going to trade this? And what we'll do is we'll just get rid of the old channel so we can look at this new price action, and we'll go from there. Let's say that we're waiting for this thing to retest, and it sure does. Okay, we've now marked a level on the chart where we have one higher low, or one low, then we marked the higher low, and we just simply drew a simple trend line across the bottom. Now, again, this is just the start of an early potential channel. We don't know if it's going to be. So how would we trade this? Well, let's go back to that concept that we talked about earlier. Remember when we said this channel was broken? What broke it? What was the result? Well, it was a close outside of this, and then this following candle just really killed it. So maybe we should use that as our rule for getting out of a broken channel. So if we're going forward now, we're assuming, hey, this looks like a potential new channel, right? We've got, the potential for a start back the other direction. Maybe we should use those same rules to get out of a losing position. So how could we do that? Let's experiment. Let's say that we took a long position here and we said, okay, we don't really want this thing to go much lower than if we look left. Let's use some structure here. We've got this area of demand, and let's say we put stops below it, right? We really don't want to see this channel break that upward pattern. Now, there may be a bit of oscillation around this area. Channels are not perfect by any means, but we are basically anticipating this thing to continue on to the previous high, to continue this move before anything else. Because if this thing kind of breaks structure here and just flops through this, again, we would do that same pattern that we started out with. We would call that a broken channel. So we don't want to see the channel break. We want to trade while it's there and avoid it while it's not. So let's just say that we target, let's say we target the previous highs. This gives us just about a 2-to-1. If we tighten this up just a bit, there is a 2-to-1 risk to reward, meaning that if we risk in this scenario $100, we are making potentially up to $200. And again, all we're doing is we're trading a retracement in what seems to be the early formations of a channel. So we'll let this run a little bit, and you can see we got a nice reaction off of the bottom of this channel so far, and let's see if we can get some extension. So we came back, retested again, and now the question is, can we get a pop through to the other side? And again, by the way, take a look at this. This is a good example, another realistic version of channels, right? You have a channel here. We've actually retested again and done a bit of choppiness right around here at the bottom of this channel, but we still have not yet violated this channel, right? We didn't like massively close underneath to form a lower low. In fact, we've stayed fairly consistently here to the upside. And finally, let's see if we can get a pop to the upside. We're almost there. Did we hit that? I think we almost did. There it is. We closed out. So, and here's the thing, right? Right off the bat, you can already say, well, Nick, why don't we target the previous high? Let's say that we took 2 trades, right? And this might be another scenario. Maybe you let one run longer, right? So let's say you're in this trade here, and then the other one, you're just going to be trying to target the top of this range. If this thing does continue on, which it does in this case, let's say that we're really looking for an extension. Do we get it? I mean, this is a greedy attempt to try and get all the way up to like here. Because again, now we're talking about like targeting the top of the range, which is another option, right? Traders have different approaches to how they take profits. Sometimes people will just target the previous high. Some people will target the top of this range. This seems a pretty aggressive attempt to try and get to the top of this range, as this range is quite large. But let's just press play and see what happens. Maybe it does. It looks like it tried. And ooh, look at this, you guys. I think we need to come back to this idea. Again, we'll see if we can get back to the high of this, but check this out. If we extend this out, look what happened yet again. Seems like we've already started off on the right foot. And let's just repeat this process while we see if we can get back to the previous high. We'll continue to trail that along with price. So now we are really in the confines of a nice little upward channel. You can see we didn't actually hit this level of the channel. And in fact, what sometimes traders will do is they'll add in another level, right, to sort of see what is the most recent price action. You kind of see we've now been respecting what seems to be this trend line here as our area. So you know, we'll leave both on there. And this is again, going back to what we said earlier, channels are not perfect. They are not going to be the holy grail by any means. Nothing really is in trading, but they are a nice, simple way to look at price. And let's just say that we bought this thing on the retest of the trend line that we initially drew. And same concept, we're looking to avoid lower lows, right? We don't want to see levels like this break out. So we'll put that in mind. And let's say that we took this trade. I know I'm playing hindsight here, but again, just going off this channel, let's see what we could have gotten in here. We'll target the previous high and see if we can get it on this one. And there it goes, you guys. Look at that. So we hit several things here. We did hit the target that we marked here, but then we also hit the top of this channel. And let's see if that gets respected by any means. We'll see. You know, so from here, we would expect some form of a pullback after that major run up. So we've just tagged at the very top of this range. Let's see if we can come down a little bit. And there you go. You can kind of see now, okay, let's also extend this out. So if we have any more trade ideas, we can do them. And at this point, you can actually see, look at this, how price came and tested that area. It's amazing how trend lines, they will test so many concepts along their way. So again, we'll go back to our kind of extreme overall example. Let's see if we can get another trade. If we pop to the downside here, and there it is. Again, that's our entry level. We're looking for no lower lows. So this is kind of tricky because look at this. Again, this is why I'm doing this video. I'm trying to give you guys examples of real world trading applications. Where do you put a stop loss in this case? This is the tough part because now, you know, we've been using this methodology of don't want to see lower lows, but the previous swing low is all the way back here. So do we put a stop loss all the way back here? That's a pretty large stop loss. So, and that's the thing. That's where you kind of have to define your strategy pretty well. I mean, to be fair, what you could make the argument for is we've got this structure here, right? Maybe we don't want to see that level get cleared by much, and we can tighten up the stop a little bit with a target at the previous high. Now, the Elliott wave traders who think, you know, or who are big advocates for the idea of, you know, a 5-wave pattern, right? We are sitting at 1, 2, 3. So we potentially have more room to go, right? Oftentimes they think that there's 5 waves on average in a good upward trend during, you know, Elliott wave theory. I'm personally not a huge Elliott wave guy, but for those of you out there, I just wanted to point that out. So we do theoretically have more potential for this trend. Let's target the previous high and just repeat the strategy again. And it doesn't work. And it doesn't work. And that's the thing, right? Sometimes, no matter how good your setup and going along with the trend and playing it as you should according to the strategy you do, markets are going to do some crazy things sometimes. And this is a good example of what we would have called, remember, a break of this upward channel. So this channel was given the goods while it gave the goods and then no longer, right? And that's the point with any strategy. And I want to highlight this because even though I'm showing you some good examples, we have to understand that no matter what we trade, there's going to be times where it's good, and then there's going to be times where the strategy breaks down and we have to restart. We have to reevaluate what we're doing here. And in this case, this would be a restart point. This would be a breakdown. Things did not work. So let's count up what we did here. We took 3 trades on this theoretical strategy. We took the first one, which ended up being a plus. Let's say we risked 200 on each. This would have been plus 200. This would have been plus 200. Now remember, we also let some trades run. We're going to ignore those, but let's just assume we just took these trades back to the highs kind of concepts. And then finally, we lost $100. So with these 3 trades, we would have made $300. Not bad considering what we did is basically we just followed the trend. We just followed this breakout. Again, we highlighted this point as a breaking point in that previous downward channel. And again, if you start marking your charts up with channels, what you'll see is they break all the time. The point is they don't need to work 100% of the time for you to make money. You can get a good risk to reward going. You can trade assets that you particularly like, and you know, you can go along with this. The biggest criticism that I would have for channel trading is that there is a large metric of subjectivity to the default parameters of what we're doing here. Remember, we've drawn these trend lines in a certain way. We've added stop losses a bit differently here. So there's not like a purely mechanical way that we approach this. That would to me be sort of a negative. And a lot of times traders don't like strategies that are not 100% purely mechanical. But this strategy that we did here today was a bit, to a degree, subjective, right? And as most price action is when you don't use purely mechanical rules. And by the way, what I mean, an example of a purely mechanical strategy would be buying RSI when it's under 30 and closing RSI when it's above 70, right? Those are mechanical rules that everyone can take the exact same trades if they had that mechanical set of rules. This is a little bit harder, right? We're going to draw our trend lines inevitably a bit differently. The first person might draw it a little bit differently and might not get all the same trades, right? So the point is, trend lines become subjective. Stop losses can be a bit subjective if you don't have specific rules. So again, it's a bit of subjectivity here, but many traders are fine with that in the sense that, price action, there is a bit of subjectivity and there's a bit of, you look at the charts long enough and you start observing things and you may, it's not necessarily a gut feeling. It's more of just an intuitive, you're marking up the charts. You have seen these patterns occur so many times, you start feeling out where the market probably will reverse. Like in this case, we sort of saw this as a breaking point. If it was not able to hold, it did, and now it continued lower. And so it not even that, it just continued, right? It just really fell. So just the idea that we're talking about here in terms of mechanical rules, it's not specifically, you could potentially test some concepts out. You could get very mechanical with this, though the trend line is a little bit of a tricky part. In terms of drawing trend lines mechanically, you have to make decisions, right? You could trade, you could do extreme lows. So if we were to draw the line along the absolute lows here, then perhaps we would still have much of the same trades. But, then you have to define a whole nother parameter set. Do you now draw this new trend line as you're going along, right? And then this new trend line. So you can get a bit confusing there. But for the basics today, what we talked about was channels and how to identify them and how to potentially trade them. Again, when we strip everything away, you can see it's back to just normal price. And you can kind of see how it does take some practice. You need to start getting into your charts and applying, trend lines and breakout points and understanding, where stop losses can go. And I would definitely recommend that you try this stuff out, demo test extensively, whether you trade on MetaTrader, on TradingView, spend some time on these concepts, and it should be helpful to you. Thank you very much for watching. If you enjoyed today's video, make sure to hit the thumbs up button and subscribe. We'll see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.